So the results showing that trade conditions have tightened, one would assume surprising, given that with all the World Cup related trade, one would have expected to see somewhat of an uptick. Has it been a surprise for you?
Yes, it was a surprise, but the explanation is that trade expectations fell short of the expectations in the market. We expected a stronger visitor activity, stronger visitor contributions to trade, and that didn't realize. There was a build-up in the May index towards stronger activity. Firms geared up in terms of the inventories. There was an attempt to reduce backlogs. So there was a high expectation in May that there would be strong activity in June, and that didn't realize.
Yeah.
So firms' current stocks managed to keep them afloat in terms of visitor activity during the World Cup period, particularly June. So what we found is that businesses didn't dramatically have to increase stock. There wasn't pressure to get emergency orders delivered. But one has to also look at this index in relation to our business confidence index, which together they've been playing musical chairs over the last few months. When one goes up, the other one goes down. And that's atypical because usually they move in tandem with each other to some degree. And the message of looking at them together is that the business confidence index has acknowledged that there's the potential for long-term real economic benefits, provided we work at harnessing those benefits. The trade index is saying on the micro level, there weren't substantial boosts in terms of the economy, particularly the trade sector, but there is potential for activity down the line if, once again, we work towards harnessing the benefits of this World Cup.
That, to a degree, being reflected, though, in the trade expectation index, where we see levels or confidence levels there sitting pretty much steady at this stage.
Quite right. The trade expectations index is more in sync with the BCI. But with the predictive nature of indices, one has to consider that these are not guaranteed outcomes, that it requires a concerted effort on the part of business and even to some degree our political leaders to market our economy, take active steps towards growing trade, encouraging inward investment, and also encouraging expansion of domestic enterprises. And what the indices in conjunction with each other are telling us, the BCI and the trade index, is that the potential is there. You now have real marketing tools that you can use to advance all those factors, but you have to go out there and make the effort. You now can show the world that you are able to deal with the crime challenges that we have that have deterred many investors in the past. You're able to show the world that we have very strong support infrastructure on the telecom side because the broadcasts were pretty much delivered across the world uninterrupted. You're able to show the world that you have first world financial services and logistics infrastructure.
Well, certainly progress is being made, though, because, I mean, if we look at that May-June figure, you said there was a lot of activity ahead of and a lot of inventories being built up ahead of that World Cup, and then, simply demand not reaching that overextended expectation. But if we look at, this on a year-on-year basis, we are seeing the trade activity index still 9 index points higher than in June last year. So indicating that there is some positive progress certainly being made.
Definitely so, and to some extent that also shows World Cup impact because we're better off this year than we were last year. That's fundamentally what it's saying, and the reason we're better off is in addition to the recovery, which has been relatively mild, it's the impact of the World Cup. So although the index itself is in negative territory, one could see the positive influence of it on these indices, although in some respects it is muted by other negative factors or still held back by negative factors. But if the World Cup were not in the picture, we would be experiencing a situation that is substantially more negative than the one we're seeing right now.
Let's take a look at some of the risks that prevail when it comes to threats to this picture moving forward. What are we looking at?
Well, the key risk factor is the performance of the global environment. We found that domestic activity has been fairly muted. We're hoping that coming out of the World Cup, our consumers will continue to spend. But that aside, we believe that the real impetus on local business could be from their global activities, and we've been encouraging our members, small, medium and large, to become more actively involved in the global environment. Now, the key risk there is the direction in which these fiscal problems that we're seeing around the world are going to take, and the impact that could have not just on our trade activity but also on the management of our own public finances. So those two are the primary risk factor. we're also coming out of a season where we were plagued with by strikes, and if that hasn't completely been done away with, that strike season continues, then that could be a risk factor. But if one were to point to one overwhelming risk factor, it has to be the direction in which the global economy is going to take. And that is the reason why we're finding that the BCI and the trade index are slightly ambivalent about their future path.
Yeah, let's take a look at what this spells for our own economic picture here, because we saw selling prices and input prices both decline over the month of June. What does this spell for inflation moving forward? Because it would indicate an easing of that inflationary pressure, right?
Perfectly correct. That is one of the good news items from the trade index, that both in terms of the current inflation picture as well as in terms of the outlook for inflation 6 months into the future, the model quite strongly points to an easing of inflationary pressures. And we've also predicted that although inflation may increase slightly, it is unlikely to exceed the upper bound of the inflation target.
Yeah.
And that is what the model is confirming to a degree.